Welcome back to Halftime Report on CNBC-TV18. Now, talking about the investments in the equity mutual funds that have surged by 81% to record highs of over 42,000 crore rupees, and this is in the month of July. To talk to us about these trends, we're joined by the market veteran who has predicted the record high mutual fund equity flows for the month of July. We have Nilesh Shah of Kotak Mahindra AMC joining in with us to talk to us about that. Nilesh sir, good afternoon and thank you so much for joining us on the show. You know, this is very interesting and very heartening to see such good numbers come in, and also in terms of NFOs, 30 new NFOs launched. Look at the number that came in there as well. Do you think this NFO rush is something that will sustain, because that was leading the growth this time for these equity funds as well?
As SEBI permits more and more mutual fund players, they are likely to launch various schemes as permitted under SEBI categorization. And hence, will we expect more NFOs? Answer is undoubtedly yes. It is directly linked to the number of new players entering the mutual fund industry.
Okay. Well, Nilesh, you predicted that despite all of the uncertainty in the month of July, you had said just watch out for the numbers this month, because that's probably going to be record-breaking, and that's exactly what happened. So kudos to that. And but can you put on your hat again and look into the future and tell us, is this kind of momentum going to continue for the next couple of months, considering that we do live in uncertain times at this point?
So, as one famous Hindi movie dialogue said, "Kabhi kabhi galti se hum sahi ho jate hain." So these are all random luck. I don't think so we have predictive power. But we do foresee that SIP has now become a common language. It is the language spoken by millions of investors, and SIP flows is likely to continue. The other up and down move comes with NFOs. Sometimes NFOs gets bunched up, sometimes they are scattered. But one thing consistent among investor behavior is that whenever markets have become attractive, it is always SIP plus NFO plus lump sum purchases. And whenever markets have become expensive, it is normally SIP plus NFO minus redemptions. The behavior of investors have matured, and they are doing contra investing by buying on dips and selling on rise, which is fantastic.
Nilesh, what about the small and mid-cap funds as well, right? Like in the earlier part of the year, we had heard investors raise their concerns coming in that, should we stop our SIP, given that they were not performing that well. But this time, look at the flow that came in there as well, right? Mid, small cap funds, they are doing well. Do you think this is a trend now that will continue? And maybe investors are becoming more mature towards investing here, and maybe will wait out, to see these cycles that go up and down?
So I don't think so investors were as much worried about small and mid-cap SIP. I have been going and meeting investors physically as well as virtually and taking a poll. Did they stop their SIP in small and mid-cap fund? And by and large, 99% of audience answers negatively. They continued their SIP. I think thanks to all the mutual fund distributors, registered investment advisors, and media personalities like you, people have recognized and realized that SIP is something which you have to continue. There will be ups and downs in SIP returns, but if you continue with right investment horizon, eventually SIP will play out for you. They also probably combined SIP with asset allocation. And while their SIPs continue, they may be adjusting their portfolio on the ups and downs by lump sum investment or redemption. So the behavior of investors have matured. And I don't think so they are as worried about the market correction as probably some other people.
Okay, fair enough. Well, Nilesh, just hold on. We have a lot more questions, but we just need to take a mandatory break and we'll be back with more. Stay tuned. Welcome back. Well, we're still in conversation with Nilesh Shah of Kotak AMC to discuss the record equity inflows that we saw for the month of July. Nilesh, I actually wanted to narrow down in terms of what we could see as a trend when it comes to debt mutual funds, because that's seen a resurgence in the month of July. Do you think that there will be more Safehaven investing coming in the coming months as compared to what we have seen in the earlier months, simply because of the risk of sentiment, which is probably playing out a little bit?
So in the debt space, there are two categories. One which is more of a parking style, which is mainly used by corporate treasuries, HNIs and family offices. There is very little retail participation over there. Those inflows are linked directly to banking liquidity. If liquidity highs, we will receive flows. If liquidity is low, we will see redemption. On the other hand, there is one very interesting category called income and arbitrage fund of fund. In this, we are seeing retail as well as HNI participation. There, we are seeing more retail flows, and we believe that's sustainable. But now, with 12 lakh rupee tax exemption, clearly there is one category of investor which are not investing in debt mutual fund because they believe they can go and invest into other products. My recommendation to investors will be, please follow the dharma of asset allocation. As much as equity is needed for your portfolio, debt, gold and real estate is also needed for your portfolio.
Absolutely, debt, gold is also needed for your portfolio as well. So that's important in terms of asset allocation, Nilesh ji. Just one word, what I wanted to understand is in terms of, big cities versus tier 2 and tier 3 cities, how is the fund actually, the split going between these as well? Is there a further growth coming in these smaller towns?
Undoubtedly, B30 cities are witnessing much higher growth, albeit on a lower base, both in terms of volume as well as value. The bulk of the money lies in top 6-7 cities, but the growth, incremental growth is coming more in B30 cities. I think with the advent of digitization, we are able to spread financial literacy in B30 towns and cities. We are also able to provide execution, which is very, very simple. Combination of literacy and execution is ensuring that B30 towns are growing at a faster rate, albeit on a slower base, on both volume as well as value.
Okay, well, the market has shown a little bit of reversal now. So we have the Nifty, which is spiked up into the green, up around 14 odd points. But largely, you'd have to say, still consolidating in a tight range, flitting between red and green. But Nilesh, before we end this conversation, this week is going to be important because we do have the Trump-Putin meeting, which is taking place on the 15th of August. What is your sense in terms of how critical that could be in terms of a trigger for our markets?
Undoubtedly, we will be waiting for the outcome of those meetings. I hope Mr. Putin raises the question of tariff on customers which are buying Russian oil. Only India has been targeted at that. It's an unjust and unfair levy. If that summit has some successful outcome in removing that 25% tariff, to that extent, we will be still able to trade with US with just first 25% tariff standing. If the tariff continues to stay from 27th August onwards at 50%, then certainly it's more of an embargo and it will have detrimental impact on Indian economy, especially sectors like textiles, aquaculture, chemicals and auto components.
Absolutely, so that will be key to watch out for, in terms of discussions that come in as well. But Mr. Shah, thank you so much for joining us and giving us your time this afternoon, talking to us about the mutual fund industry. What are the trends that we could be expecting there, as well as in terms of the markets? But with that, we are absolutely out of time on this edition of Halftime Report on CNBC-TV18. Some bit of a recovery that we've seen coming in the market. Thank you so much for tuning in. Up next, a business lunch.